What's up, YouTube? Listen, family, today we're going to look at the charts to kind of break down what some of the expected moves will be with this upcoming week in the market, but more importantly, at a macro level, so you guys can know when we talk about 2023 and the next leg down in the market, you know for yourself where the market may potentially go. So guys, I got a jam-packed video for you guys today. It's full of learning, it's full of value. Please watch to the end and make sure you like and subscribe. Let's go ahead and dive into it. Okay guys, I have the 1-day chart pulled up for the SPY, ticker symbol SPY. And here, as you guys will see on this particular chart, you see we are at a critical stage. Matter of fact, I want you to draw your eyes to the levels on the side. I'm going to blow the screen up so you guys can kind of see, and I want you to make a note of this so that in your own due diligence, in your own time of studying, in my efforts to teach you guys how to fish, if I was to ever leave YouTube and you didn't know a trusted voice to follow that can tell you these things accurately every single day, every single week, you know for yourself what type of moves the market is looking to make. So guys, look at the 401.21 level. That would be a 200-day resistance level on this 1-day chart. Okay, so for example, if we were to get an upward move, this is about a range you will see the stock run to before being met with some resistance. Now, it won't be a straight shot, nothing ever is in the stock market, but nevertheless, this will be a level that it should test. So for an example, if CPI that comes out on Tuesday is better than expected, guys, and the stock market begins to boom, this may be a level you see a run to before it kind of calms down and cools off. Now we can go much higher because we have been as high as 410 already just in recent weeks, and so that is a level that it can retest as well. But look to the downside here at this blue level. That is the 48 EMA, okay, and that is sitting at 390.63. So when you hear us talk about levels and stock, if we have an update, an upside target is this, but if we have a down day and stock sell off, one of the support levels is 390.63, and we get that number from this right here, guys. And you see the path of least resistance is towards this 390.63 with the current week we just came off of. However, you never want to front run or get ahead of yourself in the stock market. You do want to make sure you're just respecting the levels each and every day, because the market can do whatever it decides to do. Okay, but 390.63 is a level of support to the downside that you will see the market run a test on. And so sometimes, guys, you have these tests that the market likes to run in both directions, to the upside and the downside. That's why I say learn to be nimble and learn to be flexible. On your journey, guys, you will see firsthand that the market moves in erratic ways. So you may be thinking one thing, oh, some good news came out, this should happen. But the longer you stay in it, you're going to start to notice, man, it doesn't play out as logical as I think it should. Make note of those things though, guys. That's what it's all about. And that's why we talk so much about the fact that this is a marathon and that we want you to really be buckled in for the long term. Also, guys, in learning to read these charts, it's going to help you in your long-term investing as well as your trading, for those of you that choose to dabble into the trading part. You guys already know the main focal point is the investing piece, the long-term investing piece, the building wealth piece, the financial literacy piece, okay? Leaving the corporate plantation, setting yourself up for retirement. All those things is why we do what we do each and every day. However, in addition to that, once that's set up, that's kind of a vehicle that's like a set it and forget it, especially when you guys begin to automate it. Then you guys can learn the skills of trading, to learn the skills of selling calls and selling puts, and buying calls and buying puts, and straddles and strangles, and the whole nine, that again can expedite your process on your journey. Okay, so that is why we teach that. But this next chart I'm going to bring up, guys, this one is, you will see, is the 1 week chart. And this one, check this one out. Okay, this one, I have this trend line on here for you, but this goes back as far as 2018. Okay, and I want you guys to see we are having one down year in the last 10 years. Okay, and that's what you will get. Bear markets, recessions, those things come with the territory, but this is not an end all be all. This is one of those outliers, which is why we stress to you the importance of buying the dip, dollar cost averaging, finding quality companies when they are hitting these levels. But now let's go ahead and dissect this chart a little bit. Do me the same favor. Look at what pattern do you see developing on a bigger time frame. Okay, you guys should see a double bottom, but look at where the bottom was at. Take your eyes to the black line, which is the 200 EMA on the 1 week chart. Notice how they're different on different time frames. This is why I talk to you about the importance of learning to read charts. Okay, so you know for yourself where stocks are going, where the resistance levels are at. But on the longer time frame, these are more deeper numbers that the stock can fall to or go to the upside. 369.27 was the level that this kind of bounced off of. It overshot a little bit, but it hit resistance, guys, you know, more cleanly at 410 before it came back down. It has still all year not been able to break through that trend line we have placed on the chart. Okay, every time it has tested it throughout the year, it has got rejected. So if you talk about why do Chris teach us to buy puts, why does he talk about double tops and triple tops and pick sixes? Because we are looking from a macro perspective. This is how you make 100K in a year, guys. When you can begin to see, oh, the market cannot get above certain levels, it will run to it. You will have your rallies, but it's going to hit those levels again, rejected. So we all are buying puts off of these resistance levels and these points of rejection. You make the profit a lot more easier on your journey. Okay, and so here you guys see it tested that line again, but now it's coming potentially back down. However, we have a catalyst on the horizon with the CPI data and the FOMC meeting when Fed Chair Powell speaks that could again offset this a little bit. Okay, you might have a pop, you might have a rally, you might have a complete sell-off. Okay, so that's why I'm preparing you so that you can see for yourself whether we have a crash or not is irrelevant to you. If we have a crash, you should say, boom, stocks are on sale, quality companies are on sale, it's time to go shopping, I'm going to dollar cost average. If we have a rally, hopefully you already have been dollar cost averaging into some of your plays and you just along for the ride and looking for areas to kind of take profits, as we call it, sell the rips inside of bear markets and recessions. Okay, that is the mindset, that is the logic, that's how you simplify the game in these turbulent times to make sure that you're going about your investing journey the right way. Okay, but this 1 week chart, guys, if you see all the way back, you can even look at 2020 and then take it up to now, you can see that we are oftentimes in an uptrend. However, this year the market has been going down. We're in a constant downtrend. Many economists project we are going to see this continue into 2023, at least the first half of 2023. So think about through May through June, that time frame before we begin to see a reversal. Some say it might last all the way towards the fourth quarter before we get a turnaround. Regardless, if you have a game plan, if you have a strategy, you guys can use these times to your advantage, because I'm telling you guys, it gets greater later. It's always better when you come out of these things, but however, you want to make sure that you are positioning yourself the right way on the journey. Okay, so listen, guys, we got a jam-packed week coming up. Hopefully this lesson on the macro view of the game. Okay, I oftentimes teach you guys off the 2-minute chart, the 5-minute chart, because it helps you see what's going on in the day-to-day. But you also need to know the game from the 50,000-foot view perspective on, but what's really going on? Why do these financial experts talk about the market going down, and why are they still so bullish, or why are they still at times so bearish? And you want to know, and hopefully that 1 week chart lesson as well as the 1 day chart lesson helps you guys see the bigger picture, as well as the levels both to the upside and downside these stocks will go to. And just to close it out, guys, a really quick look at the SPY, ticker symbol SPY, sitting at 392. Right now, guys, we may either gap up tomorrow morning or we may gap down. Okay, a gap up would take us back roughly towards trying to retest 395 and try to capture that range before trying to again capture 397 back to that 400. That'll be the that'll be the angle they're pushing. But if we got down, you guys remember that 390 we just looked at and we just revisited that? That will be them running a test of that to see if it even holds. Sometimes they'll run it down there. They'll stop loss hunt for where you guys might be hanging out at. But they'll also see, did that level hold up? Did buyers step in at that level? And if it don't, it may flush to like 387, okay? However, you don't do anything but react to what you see. It's good to know the levels. It's good to listen to us come on here and try to teach you the 50,000 foot view of how things go down. But you need to react to what you see. You need to know what you were exposed to. You need to know what you were informed about. You need to know the notes you've taken. But then you kind of react to what you see taking shape, okay? That's really the angle we want you guys to come at this from. So, yep, it's good to know. And I often try to show it each and every day. SPY gonna do this. Look for Tesla to do that. Look for Apple to make this move and this moves happen, so on and so forth. However, at the end of the day, reacting and learning to be patient and learning to understand the trend and learning to understand what is the market actually trying to do. If you're in the nitty gritty, you need to, again, take observation of that, okay? However, if you're on the investing side, continue to just dollar cost average, buy at your entry zones, buy when the stock is down, below preferably your average cost, and then let this thing ride up. You make your money, you do your thing, and you keep that long-term outlook, okay? Listen, guys, I hope this was helpful. We make videos like this every day, so if you like this one, make sure you check out the next one. Remember, most people see the end result, very few consider the journey, so do me a favor. Don't forget to like, subscribe to the channel. Make sure you guys grab some free stock using my link below, and I'll catch you guys in the next one. Peace.